Hello, Face. Hello, community. And welcome to ForexAnalytix midterm panel for potential reactions in FX and other instruments going into the midterms. Definitely a lot of emotions in these midterms. And just read that voter turnout is surging, so passions are lit on both sides of the aisle. This is probably one of the biggest midterms I can remember in my lifetime, and thank God it's been a fairly long one so far. And I just want to remind everybody, just going back to the presidential election, that after it was announced that President Trump won, the S&Ps went limit down that night, and Carl Icahn left the celebration party and bought billions of dollars of S&Ps, and by the morning, they were, I believe, unchanged. I thought they would lock them. I went to bed, woke up the next morning, and because they hadn't been limit down for such a long time, and everyone was so nervous about the outcome if President Trump won, because most people wanted the status quo. So the point being is it's very hard to predict. Similar to what central banks, other red events, NFPs, you never know what the initial reaction is going to be. So in my view, I think prudence over valor, and you wait for the result, but you're prepared by having areas, and that's what we're going to do for everyone here today that's watching us live or watches our video later, so that we're prepared to react to the reaction of midterm results. So thank you for joining us today. Everyone's going to be involved. The whole team's going to be involved in talking about this. Just off the bat, the euro, which came out of a falling wedge, is retesting it, trying to make it look bad, whereas the S&Ps, which did the same thing, well above it. The dollar and the S&Ps, I don't remember the dollar reaction. I could go back in my chart and what kind of swings we had there 2 years ago. And right now the market's seeming pretty complacent. Gold is testing important support. I think there'll be another run in gold. So I'm preparing for perhaps if we break in gold. I don't consider this, I don't think it's a topping formation. I think that we could get one more run towards this upper line, which shows better on the daily, which now is coming in, 1250-ish in the, sometime this week. Silver, I don't think is going to collapse. I still think that we could have some more left in here to the upside, and that possibly there could still be one more wave in the Dixie, that this could end up being a failing rally in Dixie. If you recall, last week we came off those highs pretty good on really one day, and so far this looks somewhat corrective to me. I don't have my fibs drawn, but I'd be willing to fade dollar strength on an election. That's the way I'm leaning. And of course, we're going to have to keep an eye on the yen, which is probably the best indication of risk on, risk off. And although we're up against resistance, and it does look like we have a little 1, 2, 3 up here, we start getting through 1340, and we could get, Blake was talking to, maybe back to 114. 78.6 back is 1391. So it's definitely going to be an action-packed week. I recommend if you want to trade, you get it done before tomorrow afternoon, because results will start coming in to the U.S. Though they're always way ahead of time before all the votes are counted. You get all these different networks, including ForexAnalytix, declaring who's the winner and
I don't know about that. I don't know.
Aren't we gonna be online tomorrow, like CNN?
No, but we'll be in the chat rooms, pretty active.
Okay, buddy. So how are you, Blake? How's it going today?
I'm doing well. I'm I'm doing well. It was a very, very busy weekend, and
You look so good with your wife in that picture. You guys could be in a magazine.
thanks. We were at a wine festival. My neighbor, my next door neighbor, puts on the annual uh, Scottsdale Food and Wine Festival.
Oh, cool.
So yeah, it's great. He gives us VIP tickets, and it's awesome. We get to go in and enjoy like all the best of the best. It's the food was insanely good, and but that kind of topped off my weekend. It was a real busy weekend. I even played some golf, so that was great.
Oh my God! You have what kind of vitamins are you taking, buddy? I'd like some.
I'll tell you, I was tired last night. I was like, man, for somebody who works at home and in front of a desk, it was pretty busy. But
no excuses, old Blake. You got an extra hour of sleep today.
That's right. I did. Well, actually, you know what? I did, but I didn't.
All right, you could have.
I could have, but I wanted to get up a little early, and I wanted to, I did final preparations for our discussions today about the midterm elections, and we've got most of the team coming in today, and to say their piece. So, I'm gonna give you guys a general overview of kind of, the thing about like even you talk to Stelios. Stelios is probably one of the better educated people that I've met over the years, and he's and he can correct me if I'm wrong. English educated in Greece, worked in London, worked on the trading desks for one of the biggest banks. He can tell you which bank if he wants, and he still is like, I don't really understand U.S. politics. And so we have so many non-American traders that listen to this webinar because it's a currency webinar, because currency trading is so popular globally. But as you know, U.S. politics is really, a driving force, especially with this presidency. It's such a driving force, the last 2 years, and probably will be for the next couple of days, that it's important just to kind of give you guys an overview of everything that's happening. So,
well, you have my attention, buddy. I'm looking forward to what you have to say, because to me, I just throw up my hands as an American and say, I'll react to whatever happens. So I voted, but.
Well, I'll be out voting tomorrow, and no one needs to know how I'm voting or why I'm voting the way I'm voting. It's just, the fact of the matter is midterm elections are tomorrow. Now, for those of you that most of you probably know, in America, we vote for a president in a general election every 4 years. Midterm elections is kind of like it's kind of looked at as the barometer of the current administration, and that happens halfway through a presidential term. So, that's why everybody's looking at this election as being so important, because if you get this, we have two major parties. We have the Republican and the Democratic Party, and the Republican being, the party that President Trump represents right now, which is interesting because he had always voted as a Democrat, years before. And anyway, all I have to say there is that he represents the Republican Party. So the Democratic Party had lost both the House and the Senate at the presidential election. So midterm elections, there are, currently there are 435 seats that are basically being fought for in the House of Representatives, which is, one side of Congress, and the Senate, 1/3 or 35 of the seats in the Senate are being fought for. And there's lots of governor races and, mayor races just across the country. So this is going to be viewed as, does the U.S. public endorse? I mean, and this is very broad, in very broad terms. You can't just say, it's like the U.S. people, the American people, saying, do you approve of President Trump or do you not approve of President Trump? And a lot lot of analysts are expecting what they're calling a blue wave, or a Democratic move to take over the House and not the Senate. I don't think anybody's expecting the Democrats to take the Senate, but possibly the House. Now, you've seen comments from President Trump. He says, you know, if the Republicans can hold the House, and he's talking about the House of Representatives, then there's going to be a middle class tax cut. Now that's rhetoric, you know, that's talk. I mean, it's political talk to try to sway the vote towards Republicans for the House of Representatives. You know, it's trying to get all the people, the middle class, if you will, the blue collar workers, to say, oh, you know, we're going to vote for you know, the Republicans so we can get this tax cut, right? But you know, if you think about it, you're like, well, why did you give all the tax cuts to all the corporations and all the wealthy, and you didn't give it to the middle class initially? Maybe this is a strategy all along. I don't know, but for the most part, you know, most analysts are expecting, you know, the Democrats to, quite possibly, the risk is to take the House. Now, before I get into, I wanted to share some information with you guys regarding Nate Silver, who is from who's he from? He's from 538. He's the, you know, big predictor of elections, and, you know, is very, very popular. I want to share some information that he has, but I want to talk about the FX response first, because one of the notes that I read over the weekend, and this is from damn, what's the name of the bank? Nordea Bank, says, you know, in their comment, let me find it really quick. Trump is associated with the strong pro-cyclical policy mix by now. And this is why a weak election for Trump and the Republicans should be considered US dollar negative. Prospects of less fiscal stimulus is not what the US dollar needs right now, given the stretched long US dollar positioning and the weak outlook for momentum in the ISM index from here. So it's really, I mean, basically, if the Republicans have a poor showing Tuesday night, and you get the quote unquote the blue wave, you're probably going to see some dollar weakness. And if you get if the Republicans can manage to retain the House and the Senate, then, you know, you're probably going to see some, you know, massive dollar strength come through the market. And I mean, it's pretty simple. I think it's pretty outright. The problem is that, you know, we're going to get polls and we're going to get exit polls, and you're not going to really know, and it's going to be a little volatile. It's kind of like the 2 years ago when we had the election, the presidential election, and you know, everybody thought that Hillary Clinton was she was a shoo-in to win, and she was just going to win. And then when Trump eventually won, you saw this massive stock market rally and U.S. dollar buying come in after that. So right now, you know, technically speaking, and I'm being very generalized here as far as the U.S. dollar goes, but, you know, as far as the dollar, you know, looks, I mean, we can argue technically there's a top here, and I think we could arguably say that if the Democrats do take the House of Representatives, the top in the dollar here is going to hold. That means that, you know, that if you look at the euro dollar is not going to sink below 113. 113 is holding, and I have, you know, obviously alerts set up here because I want to know if the euro dollar breaks below 113. If I'm not around, or happen to be sleeping, or happen to be away from my computer, I've got alarms that are going to trigger all over the place and hit my iWatch and, you know, my phone and everything. So ForexAnalytix is really good about, you know, sending out all these alerts when they all come out, which is great, especially if I'm mobile at the time or happen to fall asleep at my desk, which is not uncommon during late night trading. Anyway, but the euro is, for example, is already weakening back to this like middle of the range, and frankly, I really expect us that you notice we're testing in the 618 retracements, 113.58. We are between the 114.50, which is a big downtrend line. It's also, if I'm not mistaken, it's the 38% retracement. Oh, well, 38% retracement is actually at 115, but we're previous support, current resistance, downtrend line. It's capped us. It all comes in around 114.50. Support is at 113. We are probably going to end up being mid-range, right where we're at, not too far away from this going into tomorrow. I can't imagine we're going to get too far away from here. We might get back up to 114 and change. We might get down to 113.30. Because it's not like we're going to sit in a 20 pip range for the next 36 hours. I really doubt that, but the ranges are probably going to be tight. So if I have to, draw or imagine for you guys what I think is going to happen over the course of the next, 36 hours, we might do this, we might do this, we might, but I think we're going to end up consolidating in the US dollar and also the euro dollar going into the elections tomorrow night. Okay, so we don't know when, all the votes are going to be counted, when a winner is going to be declared. I mean, it's going to depend state by state, and there's a lot of states up for grabs. There's a lot of seats that are, there's a lot of seats up for grabs. There's a lot of races that are very close right now, and I think you can say that with a lot of key states. I mean, states from like Florida to Arizona, which is a key battleground state, to the Northeast, like Maine. There are so many especially House of Representatives seats that are really neck and neck. But I'm going to read you something from, and let me go ahead and pull it up. So this comes from Nate Silver, and I think most people here know who Nate Silver is. He is from 538. He's so well known for predicting via algorithms so many different outcomes. He looks at everything really, but he's obviously very well known for politics. And his last email says, Republicans need a systematic polling error to win the House. All right, and this is the House of Representatives. So what he's basically saying is that, there needs to be like a large margin of error in the polls for Republicans to win the House of Representatives. And basically what he's saying is that there isn't, it's really skewed towards the Democrats taking the House. And then he also predicted that he goes a week earlier, Democrats almost certainly needed a systematic polling error to win the Senate. So by his measures, he's looking at the Senate is going to be retained by the Republicans, but the House of Representatives may swing Democratic, or we might get that blue wave, and that's going to lead to I guess you can say it's like a hung Congress, where the Trump administration is going to have a much more difficult time pushing their agenda through, and which ultimately will be dollar negative, which that would, for me, put the euro dollar above 114.50. Now, before you get really bared up the dollar and you go, wow, the dollar is going to sink and the euro dollar is going to, it's going to 120. And before you, get that idea in your head, don't forget that Europe's got its own set of issues. I mean, we've got, this is going to be an interesting, hold on really quick. This is going to be, before you get too bared up the dollar and you start getting so bullish the euro, keep in mind the interest rate differentials really favor the dollar. It is getting increasingly expensive buying the euro and holding on to it. You know, with interest rates in the U.S. moving higher, you've got bunds that are basically, or boons, excuse me, that are basically staying in the same spot, and you've got U.S. treasuries that are falling. That means yields are going higher. So the yield differential between the U.S. and the euro is getting wider and wider and wider, and it's not cheap buying the euro and hanging on to the euro anymore. You know, it used to be, you know, you could buy the euro or sell the euro and interest rate differentials were pretty tight, but because interest rates in the US have been increasingly moving higher, it is getting more expensive to short the dollar. So I don't think that a sustained move in the euro higher is really even possible at this time, unless we get past like some of these you know, Italian issues. But that doesn't mean that the euro can't squeeze higher. That doesn't mean that the euro can't see higher levels. And frankly, what I'm looking for is I'm looking for the break here between the you know, the 114.50 or back below 113. And I think that, you know, we get below 113 in the euro dollar, and that's probably going to be pretty big risk on, you know, it means that you get a Republican you know, House and Republican Senate at the same time, and that may happen. Now, I just saw a tweet, and I'm going to share this information with you from Gelos, who I trade for, by the way, for those of you that don't know, and he just tweeted this, and I thought this was pretty interesting. So this is you know, the Democratic House, Republican Senate, and this is probably the most likely outcome, and this is what CityFX is looking at, right? There's 75% chance of Democratic House, Republican Senate, and that's exactly what we've been discussing this whole time. All right, and you know, so the euro might go up 0.5%, which, you know, is not a big move. Dollar yen drops, you know, 0.75%. Aussie dollar moves 0.25%. Legislative gridlock, House oversight of administration. So this is the hung Congress, if you will. Now, if we get a Democratic House and a Democratic Senate, which is not expected, this is the blue wave, if you will, which you could see City sees that as a 10% you know, probability. Now they say a 1% move in the euro dollar. So let's measure that out from current levels. So, you know, if we go, you know, current levels, 1% move in the euro dollar, you're talking, you know, what is that, 115? Personally, I think we could see much higher levels than that in that situation. But what they are noting is you could see a bigger move down in the dollar yen, which that would make sense. I mean, if you get a Democratic House, Democratic Senate, you're going to get risk off. You're going to get stocks coming down. You're going to get, you know, the dollar yen is probably going to be moving down more aggressively. And what's interesting is they say that the Aussie dollar will actually move up. I doubt that the Aussie dollar will move up much. My personal opinion. Okay. Then, you know, you can see the rest here. And remember, Gelos just tweeted this, and I think this is a pretty good understanding as far as probabilities go.
Yeah, I'd hang on to that, Blake, and see, you know, how accurate it was after we have outcomes.
Yeah,
you know,
well,
I think interesting to see.
I think this is a good roadmap. Like I said, I think this part of it, you know, this part of it is probably pretty realistic, and probably, I mean, this is not going to happen. You know, that's not going to happen. And the chances of that happening is probably pretty slim. So I think, you know, you've got these two probabilities are probably, you know, which they note this is a 75%, this is 14%. I think this is probably, if I had to guess, like me personally, and I'm not a I'm no algorithm, and I'm not, I'm just, gut instinct kind of guy. I would think this is more like 60%, and this is like 40%. I think the Trump voter and supporter is much bigger and stronger than pollsters think. I think that
Blake.
Yes.
Sorry to interrupt.
No,
just one little point I wanted to add, which I think is relevant. There's actually a demographic difference between the presidential elections and the midterms, whereby there's usually quite a bit lower participation.
Oh God, yeah.
So exactly. So this usually favors, the kind of people historically who vote when there's a low turnout. It's more like the older people, and I can't remember, somebody said it as the old white man basically voting. When there's a very low turnout, and that's
Stop talking about me, Stel.
But they are typically going to be Republican or Republican voters, and they're going to be Trump supporters. I mean, I live in the area, which is very much
a lot of old white men in Arizona.
There are a lot of retired, older, Caucasian demographics. We also have a pretty big, Hispanic community too. But you're right, Stelios, in pointing out that the midterm elections typically have a lot lower turnout. So it's going to be interesting to see if there is a higher turnout than that is, if there is a higher turnout of voters for midterm elections, because typically I don't vote.
That's what I'm hearing, Blake. That turnout is really unusually large for a midterm.
And it is, and if it is large, then you can expect that a lot of that is going to be minority voting, and that is where people start thinking, oh wait, maybe there is a blue wave. Maybe there is a blue wave coming. So
good morning.
Good morning.
Blake, I think I told you a few days ago. Actually, some polls several days ago, like a couple of weeks ago, were showing that the whole Kavanaugh case had actually had given more incentive to Republicans to show up. So that is also a reason why we should be expecting increased turnout. They believed that the Republican vote would have been quite relaxed, but they think that the whole Kavanaugh case and the whole issue with the Democrats that were trying to derail or even delay it actually ended up bringing Republicans closer to the possibility of voting. That's what they said.
But there's a lot of other, I think there's a lot of other issues that have surfaced since then, and obviously, with the increase, the caravan, coming from Mexico, the movement of troops to the border, this has stirred up a lot of fear. Is one, but also it's and you've had a lot of these, rogue Trump supporters, then this is
slaughtering people in the synagogue.
Yeah, and the synagogue shooting, the pipe bombs, or the fake sarin, sent to CNN offices. It stirred up a lot of,
everyone's afraid.
Yeah, everybody's afraid, and also it stirred up a lot of, you got a lot of Democrats now that are extremely upset as well. So you've got both sides, and so I wouldn't be surprised if we get a really big turnout tomorrow. And like I said, I typically don't vote midterms, but I'm voting.
Morning, guys.
And oh, hey, we got Joe.
Good morning, Joe.
Hi. I just want to add my 2 cents into here.
Okay, we want the communist viewpoint here, Joe.
One of the things that I've been seeing that I thought was really interesting is that they have early voting in a lot of states. Some states don't have it, but they have early voting where you could vote. I'm not quite sure how far in advance you could vote, but they said that the Republican turnout was a lot stronger than the Democrat turnout in the early elections, and that some of these polls weren't expecting that, and that may skew these a little bit. I think these polls are ridiculous, as we saw in 2016 to begin with, but they're all saying it's going to be very close. But you know, if you take one factor like this early turnout and you weigh it against something else like a high minority turnout, you know, it could go either way for a lot of, especially against some of these really close states like Arizona and Texas.
Yeah, I mean, and there's a lot of close races out there, and honestly, you know, when you're looking at the markets and you're trying to make a decision in the markets, and it's very convoluted right now, and I think it's pretty easily seen, especially in, let me get rid of this really quick, especially in the euro dollar. I mean, this is an easy, in my opinion, a very easy trade to make post-election, not necessarily pre-election, but post-election, post, you know, results. You've got pretty well-defined lines and you know, ranges between 113 and 114.50. You can try to predict what you think is going to happen and try to take a stand ahead of this move, but really the move above 114.50 in the euro dollar is going to define the euro for the next, I would say, if we get above 114.50, it's probably going to define the euro for the remainder of the week. And if we get below 113, that's going to define the euro probably for the remainder of the year. So, you know, and because, you know, let me be clear on that the euro dollar, I think upside is limited. The euro downside is not. Well, I say not limited, not like it's going to zero, but there's a lot more downside than there is upside, because if you get, go ahead.
Your chart with that huge range from 113 to 118. If we break it, just a measured move is around the 108 level, and that's 78.6 back from the whole move from 103 to 125.
Yeah, I mean, you know, if the euro sinks below 113, I think we can obviously get all the way. You know, we can really, you know, make a pretty big move, because that would mean that the Republicans did retain the House and retain the Senate. Donald Trump and his administration is really going to have free reign for the next 2 years, and they are going to be able to push, you know, tax cuts and, you know, more, more higher deficit, yada yada yada, and they're going to be able to push their whole agenda. And so you're going to see probably a pretty sustained, strong euro dollar move lower or a dollar move higher. The flip side to that is if we get this, what I think is the higher probability of the Democratic House and a Republican Senate, and we get a lot of, you know, legislative, well, they have it, legislative gridlock, which I think is a perfect term to really illustrate what would happen in, you know, in the U.S. The dollar is probably going to see some weakness, but I don't think that the euro dollar's upside is going to see the same magnitude. I don't think the euro dollar is going to see 125 or one, unless, you know, certain things happen in Europe, especially with with Italy, with you know, the unknowns about Germany moving forward and the leadership in Germany. I mean, those are issues that really we don't know right now, we don't know right now what is happening in Europe, and I think it's too early to try to predict some of those things. But I'll say that I think that the euro upside is probably relatively limited at this point in time. So you know, as far as the euro dollar is concerned, I think it's very well defined as far as what we need to do or what we should be doing here in the next, you know, 36 to, well, I could say 48 hours from right now. So Joe, as far as you know, where you're from, and you're from the Northeast, what other views or opinions do you have of what's happening over there in you know, the New York area, which is typically a pretty blue Democratic area?
It is. first, take a look at that euro chart right there over the last 2 weeks. You could see it's been sitting there in a range. There's clearly a lot of uncertainty as to what's going on. You know, from 113 to 114.5, we've just been kind of meandering around those levels. But yeah, up here, I mean, in the Northeast, the races are no one's really even looking at them as important towards the outcome of the elections or who's going to gain control of the Senate or the House. New Jersey's up for grabs, and I think that's pretty much going to go blue. But it seems more like states that had Trump had one that had Democrats in office in the Senate. You know, will they be overthrown? That's what people are trying to look at. And some of those are going to be interesting, but most of them are in the Midwest and the South. Most of these elections that are going to make up the outcome, you know, for who controls the Senate and the House. And it looks like it's going to be, like you said, 75. We have 75% up there for Democratic House and Republican Senate. I happen to think.
I was going to say, do you think that number is right? I actually think it's a lot. I think the percentage chance of that, the probability of that happening is a lot less. It's like towards 60%. If I had to throw
I probably think that as well. I
don't think you can underestimate the Trump support base. I really don't think so. I mean, they've proved that they are a strong force.
Very loyal.
Very loyal.
Right.
You know, can I pose a question to the panel? Because, you know, we're looking at what could happen the next day. And I'm interested in the views of the panel that if we get a consensus result, whether it's 60 or 75, what the longer term implications are for the dollar and the euro. Because if you thought it was contentious when Obama was the president and he had a Republican House and Senate, can you imagine what it's going to be like if there's a split power here for, you know, getting anything done, and the possibility of, you know, these guys, even Trump says that this is about impeachment.
I don't think this is about impeachment.
I don't think it is either, personally.
There's too many other things to worry about. But you want to go ahead?
Let me just say that, you know, regarding your question, Dale, I think that, you know, looking, and again, I'm just pulling this up because Gello's office tweeted, you know,
it's a great tweet.
But it is good. It's like I said, it's a great reference point. I actually think that the risk of a dollar-yen move and is a lot lower. I mean, percentage-wise, like, you know, we could see a dollar-yen trading down in the, you know, 108 to 110 level, you know, in the coming months, you know, with gridlock, with a hung Congress, if you will. I think that is a bigger risk. You know, the euro's a little iffy. You know, the euro might pop up to 116. Yeah, it might eventually hit, you know, 118. But like I said, more of this move higher in the euro has to do with Italy and has to do with Germany and other issues, not U.S. related. But when you talk about the U.S. dollar, Japanese yen. And you talk about, you know, gridlock or political uncertainty maybe for the Trump administration, which I don't think is a risk. But, you know, then I start looking at the dollar yen trading down, you know, well below the 200-day moving average here at 110, and maybe even down, you know, to the lower, you know, below 110 towards like 107, 108, you know, levels like this. And that's also going to impact, you know, equities. You're going to see, you're going to see the S&P, which, you know, is already tested a major multi-year trend line here, and we're below this multi-year trend line. We're well below the 200-day moving average. We're going to be trading, you know, my opinion is probably back down at like 2,200, 2,300 in the S&P over the course of the next, you know, 3 to 6 to 8 months. I think that is the bigger risk. I think the bigger risk, if this is the actual outcome, the Democratic House, Republican Senate, we've got, you know, gridlock, I think then you're talking about risk appetite, which is going to be significantly lower. You know, you're going to have you're going to have again higher rates, less fiscal stimulus in terms of tax cuts. So you're going to see, and you're going to, you know, and especially with China and the U.S. Trade talks still up in the air, and they're only just basically scratching the surface of probably a long negotiation moving forward. These tariffs are going to start to bite. They already are biting. You know, we're going to see less. You know, from a consumer standpoint, as far as buying goes, we're going to have prices increasing. You're going to have less Black, or, you know, what was the sale after Thanksgiving?
Black Friday.
Black Friday. You're going to have less Black Friday sale. I mean, you know, it's all going to bite the economy in the future. So I think the risk of this U.S. dollar Japanese yen much lower than that. I think that is going to be a higher probability. I'm sorry, Joe, and if you'd like to add to that.
Yeah, I just want to. I happen to think that if we get the consensus, I think that initially the dollar will sell off a little bit, but in the long run, I think that over the next year or two, it would probably go big, because Trump still has the ability, without needing congressional approval, to implement these tariffs as he decides.
Great point.
So, you know, he could still go out there and do it, put whatever he wants on China, and that could cause the dollar to go bid. The other thing is that this NAFTA deal, you know, we're talking about trade wars and what's going on with trade. You know, it's as we've said before, in its current form, it's really not that much different than the previous or the current NAFTA deal, the new one that they're looking at. And there's a good chance that I think that in its current form right now, as they're looking at it, that this could get passed, just because it's not that much different than it was before.
Yeah, that's a great point too, Joe, because a lot of people think it's already done and it hasn't been ratified yet, has it?
No, it hasn't.
Okay.
No, they still have to vote on it.
Great point.
There will be. I do agree with the legislative gridlock, and that can cause uncertainty, as we know, and we may see stocks come off just from a perception of things can't get done, and the Trump agenda won't be able to get done. So, you know, that if stocks do come off because of that, that's another reason that we may see the dollar go higher.
Yeah. You know, and I'm going to be, I know, I don't know if, is Grega and Andre, are they in the house? Stelio, Steve, do you see them in the house? Because I know we have Mark Newton, by the way, and you guys have
no, they're not, mate. Okay. They're not.
Okay, they're not. Good. I'm not good because I don't want to hear from them. It's just I want to address some questions here that are coming in. But you guys that are listening in right now, Mark Newton is one of the for me, and I'm just giving you my personal point of view, he's one of the top 10 people on CNBC that I like to stop and listen to. He's so knowledgeable, technical wise. He's a CMT like Joe. He's very well versed in the markets. His analysis is spectacular. So I know he's coming up in the next 15 minutes, and so we need to wrap some of this stuff up before he gets here. I'm not going to read, for those of you that are messaging political commentary one way or the other, I'm not going to address those because I'm sorry, your opinion doesn't matter. My political opinion doesn't matter either. So I'm not, you know, whether you're right or wrong, it doesn't, you know, it doesn't matter to the markets nor to everybody else. But what I will read are some of the questions some of the comments here that I think is relevant. Bob says, unfortunately, too many of the polls have agendas. I do agree with that, and that's why I don't rely too much on the polls, and that's why I believe that the the probability rate of a 75% chance of a Democratic House and a Republican Senate, I think it's a little bit less than that. I think you can't underestimate the Trump you know, support out there. I really don't think you can. Donnie says you should take the contrarian trade and short the euro dollar. Everybody is long the euro dollar. I don't actually agree with that. I think that the market is still very long dollars right now. I believe that the dollar long trade, and most asset managers, and if you look at CFTC data, is skewed that way too. Now retail may be different. Retail may be a buyer of the euro here or a seller of the dollar, but I don't necessarily I don't mark them as wrong. Okay. Abdul says, based on the polls, which states are the main swing states in this election? Also, I've read somewhere that Democrats win, that is going to give Trump a stronger hand in trade war, which is dollar bullish. Can you give your sorry, I'm trying to read the rest of this. Can you give your thoughts on this point? Do you have any thoughts on that? I can go cover a little bit of the swing states.
I have a list of the swing states that they're looking at. There's apparently about 9 of them: North Dakota, Arizona, Tennessee, Missouri, Nevada, Texas, Montana, Florida, and Indiana.
Okay.
So those are the states that will decide the Senate.
Okay, and then you're talking the Senate, but and the House, anything there?
I don't have anything. It seems, I mean, I haven't really read anything. Everything I've read or heard about based on the House is that it's almost pretty much a done deal, that the Democrats will take the House.
Yeah. So, you know, and now as far as the the argument that Trump will have a stronger hand in a trade war, I don't necessarily agree with that. I don't know how that's really possible. The reason why I say that is because he can, you know, argue all he wants, but getting approval of Congress on his actions is going to be tougher to do when you have this legislative gridlock. Is, like I said, that's a great term that Citigroup used. So, and Joe, do you have any thoughts on that? Stelios, Steve?
Yeah, I'm not sure where I see either that this will give Trump an upper hand in a trade war. Yeah, you know, if we get consensus, I think it would temper him more.
Yeah, I would assume so too. And Ziggy says, I still think you'll be surprised, and the lame duck Congress will be the wild card. You know, and again, the Congress being in gridlock, I think is the more probable outcome. But I think the outside risk, and I believe that actually the wild card out there is Republicans retain the House and the Senate. I think this percentage is too low, and I think that you know, again, we saw it 2 years ago, and I don't think you can underestimate the Republican base. And again, that's not you know, that's not a political comment from my point of view. I think that's a reality, and I think it's still a risk in the markets. And if there is, and the Republicans retain command in the House and the Senate, I think that the dollar, the rally that you're going to see in the dollar would be pretty epic. Meaning that hold on, let me go back to this. Meaning that you could see the euro well below 113, and you can see you can see an S&P recovery. And this is I guess I should talk about this a little bit too. And this would be an S&P recovery that might take us back to new all-time highs. And I'm going to go reference what I referenced last week on some commentary I read from Jim Rogers, the commodities guru, if you will. He'd warned that you know, if we get past the trade war with China, or at least, you know, an understanding, if you will, that could take stocks to new all-time highs, and then the market would actually fail up there because, the real economy is already starting to show signs of weakness. I actually believe that the same scenario could happen with if the Republicans retain the House and the Senate. You might see the S&P rally to new highs. You might see us getting close to new highs. You could see us definitely break the 200-day moving average and probably on our way to new highs. But overall, that's probably going to be a place where you really want to be a seller of the S&P, because I honestly believe we're already starting to see the cracks in the cement underneath us with economic data that's only going to deteriorate as this growth cycle of 10 years, this extended growth cycle is coming to an end. So I think that if stocks get some sort of boost towards highs or above new highs, I think that's going to set up for me anyway, a really good short, and I'll be looking for a short opportunity up there personally. And that's a personal viewpoint, and that's something that I wanted to share with you guys as well.
One of the things that I think is going to happen, regardless of how this ends up, is that the money, the supply of money is going to increase. I'm sorry, the debt limit is going to increase, because when you think about it, either if we get these tax cuts, if the Republicans gain control, then that's going to have an effect. Yes. And then on the other side, the Democrats want to get in there and they want to do a lot of infrastructure projects. So if that were to happen, then that would also increase it as well. So I think either way, it's going to go higher. And that may have an effect in a year or two, I think. But like you said, I think the initial move, and probably maybe into the end of the year, if the Republicans gain control of both, would be, like you said, stocks to new highs. And it would make sense if you're looking for, just the timing of it. You get these Santa Claus rallies and, seasonal. The end of the year. Yeah. And along with that, I think I read that when you have, doesn't matter who's president, and when you have a split Congress, the S&P has gained 7% since 1940.
You know what? And I've got to read one other thing for you guys, and thank you for bringing that up. And could you say that one more time, Joe, for us?
Since 1940, when there has been, doesn't matter who's president, and you have a split Congress, that S&Ps have gained an average of 7%.
Wow. Okay.
Nice. Over the next 6 months. That's over the next.
That bodes very well. I just didn't want to interrupt because you were connecting the dots with possible market reactions, which is exactly what we want to do here. And as an outsider, like watching the U.S. and monitoring very closely, of course, financial and political developments. I have to say something. It's going to sound like I'm joking, but I'm not. I'm very serious about it. I think that legislation, in the vast majority of the cases during the past few decades, is only for the worse. It just bloats up the state and the government even more, and it gets the US even further away from being, a free market economy. So as far as I'm concerned, gridlocked Congress and not much progress is better than Congress doing stuff. And I'm very serious about it. This is my true opinion. I mean it.
Okay. Do you remember what happened to stocks in 2015, in 2016? Well, they pretty much went sideways, right? When we had gridlock there.
Yeah, and I was going to say, historically, and this is from this is also a note from Nordea that I wrote, Nordea Bank, that I wrote down. Historically, the U.S. dollar has fared poorly both before and after midterm elections, which have resulted in a hung Congress or political gridlock. While there is no significant U.S. dollar pattern around the midterms, a hung Congress on Tuesday will be bad news for the U.S. dollar, given lower prospects of Trump stimulus in a hung Congress scenario. If we get a hung Congress, then we should prepare for more of a mix of aggressive trade rhetoric due to the president's widespread prerogatives on trade and no further fiscal stimulus. So he's going to be, and so this is where it goes back to Abdul's question. He's going to be, he's going to be more aggressive as far as his trade tactics, but he's not going to be able to push stimulus. So will that be dollar bullish, because the markets will be bearish? Well, that's where the whole, we could see the dollar yen really push down towards, let's just say 110, 108, and the euro dollar may have very limited upside, but that means that the euro yen will be, looking at probably 122 or 120 in the months ahead. So, and then that's where, the risks may come in for the dollar. And again, guys, this is all, and we only have a few minutes here, and I just want to wrap up with saying that tomorrow night, I say tomorrow night for me, so not tomorrow night for most of you. Tomorrow night for us here in the United States, it's going to be a pretty long night. I don't know how functional I'm going to be come Wednesday morning post-election, depending on how late these exit polls, getting all the results in. They're going to be scattered. I mean, we're going to be, seeing them from, probably 8 o'clock in the evening Eastern all the way till probably 2, 3 o'clock in the morning, which would be like midnight my time. We're probably going to see, waiting for some of these last states to come in, and I'll be glued to, the political, stations, flipping through stations, looking at where everybody's at for pollings and their expectations. Expect a lot of volatility for the next 36 hours. And I'm going to take you right back to the euro dollar, and I'm going to just leave you with this one chart to really, kind of map out the future of what you're going to do in the FX market as far as the euro dollar is concerned. 114.50 is really key resistance. The downtrend line comes in at 114.38, which, this is also previous support. You can see it right here, this dotted line. Let me get rid of this other dotted line for now. We don't need that. But you can see this, 114.30, 114.50, that's really critical resistance, and support is going to be at 113. I mean, there's no if and or buts about the, if we trade below 113, at that point in time, there is a Republican House, Republican Senate, probably, hands down, and you would expect that the stock market is going to be a whole hell of a lot stronger. When you talk about the dollar yen, right now the dollar yen resistance is very simple because it's at 113.36. We might probe above here. We might actually get a little bit higher, but that is the 618 retracement of this whole move. And believe it or not, sorry, I had something in my mouth. At this point, I think the 112 level is going to be pretty key support. We get a good foothold below 112. That means that we're seeing some risk off. We're seeing that hung hung Congress, or just political gridlock. We're looking at whether it's it's probably going to be a Republican Senate and a Democratic House is probably the likely outcome, and you might see that dollar yen slip through this 112 area, and we start getting a good foothold below 112, and that's probably going to spell trouble for not only the dollar yen but for risk appetite in general. You might see stocks really start to come under some pressure. Guys, any closing thoughts from any of you before we hand it over to Coach?
No, I think you ended well, Blake. I don't have anything.
Go ahead, Joe. Go ahead.
I don't have anything else to add. I think
personally, I agree 100% with you, Blake. I believe that the markets are conditioned to take the news exactly as you described, and the vast majority of the chances is that's exactly what's going to happen in every one of the scenarios. I just want to add, because I always want to look at the long picture, the big view as well. I just want to add that in the long term, there is absolutely nothing bullish. Let's assume that the Republicans retain the Congress, both the Senate and the House of Representatives. There is the tax cuts have already proved that they're not paying for themselves, despite the trade war and everything else. The U.S. keeps hitting record deficits, trade deficits. triple deficits actually, current account balance deficits, etc., etc. So I do think that no matter what happens, the path of least resistance in the long term, with how the situation is moving, is going to be for a lower dollar. But as you said, in the short term, that's how the market is going to react. These are thoughts that we might start caring about, many months or even a year or two in the future.
All right. Well, guys, I want to thank you all for your inputs and your commentary. And like I said, if you're here listening right now, you have to stick around for the next 30 minutes or so. Mark Newton is one of my favorite people to watch and listen to on CNBC. So it's always a pleasure to have him on. Coach, I'm going to pass it over to you. And thanks everybody for listening in to our pre-election setups and analysis. And by the way, tomorrow morning we'll be obviously talking about where the markets are at as we really are on the cusp of the midterms. And everybody here in the United States, if you live in the United States, get out and vote, get your voice heard. So whether whoever you're voting for, it doesn't really matter to me. Just get out and vote. All right.
A great presentation, Blake. You're a renaissance man. You're not only a trader, you gave great fundamental views on, something that's, outside your bailiwick. Great job by you and Joe and Steve. And
thanks, guys.
And what a way to top it off with Mark Newton here. And Mark, I'm going to make you the presenter. Looking forward to hearing what your thoughts are. Hi, how are you, Mark?
Great. Wonderful. Great to be back. Thanks for having me again. How's everything with you and everybody else?
Everything's okay. Was I able to pass you the screen? Let me see.
I still don't see him as
okay,
yeah,
there you go.
Now I see him. Yeah.
So you could share your screen now, Mark, and I know it's an interesting day.
Let's see. Okay. All right.
I just made him a presenter. You should get now a pop-up asking you if you want to say
there it is. There's your charts, Mark.
Okay, wonderful.
Okay, Mark. So the worst October in a long time. Midterm elections, emotions are heated. I'm hearing pretty large turnout. First of all, does the midterms and their outcome figure into your analysis, since you're really a technician anyway?
Yeah, no, I honestly don't give that a whole lot of weight. I mean, a lot of this recent volatility has been sort of something that I've been discussing, I guess, for the last couple of months, and that began back in the middle part of September. So,
right.
A lot of the movement is determined really by cycles and sentiment and seasonality. It should have really little to nothing to do with macro events, earnings, or presidential elections or midterm elections. Like we're seeing. So
then I assume you carry positions into like a major news event, like a midterm or central bank decisions, NFP, etc.
Yeah, I mean it's to each their own in terms of risk tolerance and what they wish to do. But yeah, I turned bullish last week. I saw the price action with regards to equities as being somewhat constructive and got down to levels that I thought were important. And we've seen some recent improvement in structure and breadth and momentum. And this picture of the S&P futures sort of shows you, getting back above really key near-term trendline resistance, along with getting back above former lows, which I view as still quite positive. So, people are obviously very concerned, I think, with a lot of good reasons for the extent of the recent drawdown and how that's affected a lot of the technical patterns on an intermediate term basis and monthly, but near term I still see there being a good chance that we can push higher this week.
New highs are failing rally. Which way do you lean?
I've been discussing this with a few people. I'm not certain that we're out of the woods completely and that it's up and away. I think that we're going to see some backing and filling, and that could occur either this week or next week. I think the the extent of the sell-off likely will be done by mid-month in equities, and I think we'll probably turn higher for a period of potentially 5 or 6 months. And I don't know that indices likely can make a move back to new highs. I'm not certain that the average stock will. I see there as being a lot of damage having been done to broader momentum. And so, for me, that is important when you look at things like, the S&P on a weekly basis or monthly basis, and you see, the negative divergences that have been intact for some time. And
right.
Those are a little bit of a concern when you look at weekly charts and you see really the extent of what has happened just since the drawdown, where, we really got to the most overbought status that we've been in years back in January, and then even on the rally back to new high territory, momentum really got nowhere near that. And so for me,
great point.
That's certainly a warning sign and something that we saw back in 2000 and also in 2007. So, when I look at the longer term picture, it is a concern to see that momentum is starting to fail to keep up with price. And for me, that's that is a sign that equities, likely are going to start to begin a peaking out process. And I'm not certain that, we're there and we go straight down this year. We could potentially have another month or two of rockiness before a rally into next year, but I still see this as being.
So we're late cycle. We're late cycle.
Oh, very much. I think that's right. I think either it begins next year or it begins in 2020, and likely lasts for 2 to 3 years, and potentially to 2022. I think so.
Okay.
I'm not all that optimistic over the next, between now and the early 2020s, but I think that in the next 6 to 8 months, if you're if you can track strength, that you can still make money in this market. There's certainly plenty of stocks that look attractive to me, but I do have some worry. I just worry that everybody is sort of saying, well, the economy's slowing and we're on top of it, and it's time for everything to turn down. And I think it's a little premature. We're coming upon one of the better stretches of seasonality that we typically see in all midterm election years. There's really never been.
The big question is not whether or not which way the market goes, but being in the right sectors to participate in advance. And is it possible in your work that, the FANGs are done and that leadership is going to have to come from other sectors to lead it? Maybe it's going to be possibly even commodity related stocks.
Well, I think that probably eventually will prove right. I mean, some of that has to do with the U.S. dollar and whether that's turning down, and we can talk about that in a little bit. I think that, FANG certainly has shown some evidence of peaking out when you just look at baskets of, the FANG stocks based on the New York FANG index, which has about 10 stocks, and there is Tesla that's included in that. I typically tend to look at things like the equal weighted technology index, SPX, EWIT, and Bloomberg, and so that's something that strips out a lot of the large cap tech stocks. And for me, you did see some evidence of that having peaked out just in in the middle part of this summer. We saw tech start to weaken. So this is a ratio chart of tech on an equal weighted basis versus the S&P. You can see that this 2-year trend line was in fact broken. We fell, and now we're rebounding back. So it's going to face some really key challenges, I think, in the weeks to come, and whether we can simply snap back or whether there's more to come. And for now, I'm not certain personally that this growth trade is completely run its course. I mean, I look at things like growth versus value, and we did see some near-term signs of that being a bit shaky of late. But I look at just ratios of the S&P ETFs, the growth versus value. For me, this is still intact. This isn't really a top, but we've certainly seen some choppiness since the summer. So I like healthcare. I like discretionary industrials. I think the recent movement in financials and industrials, for those that just track some of these indices, has been very constructive, what we saw last week. And it's important for people to pay attention to really what's happening because we saw, pretty big breakdowns across the board, and then that was immediately recouped. And if anything, you look to have made 5-wave declines in many of these ETFs, and now we've snapped back and recaptured the area of the loss. And so the breadth last week was a lot stronger on the upside than what we saw from, the 11th or the 17th
what are we looking at here? Are these the banks? The XLF? So
this is just the XLF. This is the broader, and of course that's weighted heavily towards the, the Berkshire and the Wells Fargo. But, it is important to see when breakdowns fail, and I think you did see that in a couple different ETFs last week, whether it be XLF or XLI. So I turned pretty much negative back in the middle part of August, and I was, a few weeks early with regards to catching the peak of the market, but breadth did turn down, really the final day of August with regards to advanced decline, turned lower throughout September. Markets obviously peaked on the 20th, right near the equinox, and then again on the 3rd of October. So it was, an interesting time when nothing was working. And so people sort of scratched their heads that, why did the market sell off in October? And for me, it made perfect sense. The market was finally paying attention to what breadth and momentum had been suggesting for
months,
some time. If anything, for me, September was a much stranger month because tech wasn't working and the market was going up, but yet fewer and fewer stocks were participating.
Yeah, that was a pretty good market tell. So how's the dollar play into all of this?
Well, I think the dollar is going to peak out by year end. I still feel that the dollar has some upside when you look at things like the Bloomberg Dollar Index, which has a far lesser component against the euro than when looking at the Dixie. And so, when I look at daily and weekly charts of the dollar, I'm still constructive near term. I think that, the movement today in particular looks to have reversed, and we very well could start to turn up a little bit more. And, I look at this as being a pretty clean breakout of the consolidation that really has been intact over the last few months and really since the middle part of 2017. So when you look on a weekly basis and really see how, some of the DeMark signals that I use line up with that, you see that, it's still a little bit early to call for a peak in the dollar, even though sentiment has gotten very enthusiastic, I think, to say the least. So, I'm sort of a near-term dollar bull for the next 3 to 5 weeks, and I think I would turn a little bit more negative, at least from a counter-trend perspective, on really any further rally into mid to late November, or if you see obviously weakness, and you look at euro to dollar and pound to dollar. I mean, I think most of these are still showing evidence of.
I'd like to see your look in euro, if you don't mind, and if we're talking, why is it that you have this time period marked as a potential turning point in the dollar? November, December.
Well, I only look related. It is, and I just look at historical cycles of you have seen quite a few turns in the dollar, I think, in the month of November, December in the past. And we saw the dollar peak out in late December of 2016. And I see it being, really a cycle that began in 2016 and should be trending lower into the early 2020s. So I'm really looking at selling into strength in the U.S. dollar over the next month. But I don't view this chart just yet as being all that bullish with regards to the euro. So I'm still thinking that we probably pull back to, potentially 111 and a quarter, 111.50 or so over the next 3 to 5 weeks. And for me, that would line up perfectly with the mark, and it would catch a lot of people off guard, I think, that would be forced to cover, to feel that they were wrong and betting, on the dollar against the euro, and that would really embolden them at really the wrong time when it's likely that we could probably hold.
You'd start hearing parity talk again, Mark.
Yeah, I think when that starts up again, then we would really be inclined to sort of fade that move and think that we reverse. So, but right now, I mean, this move is intact, and the euro down and up on the dollar, and when you look at dollar yen, I think we're coming upon a pretty critical area there too, which we'll see how that plays out. But the charts have looked pretty constructive to me, there, and so
Okay.
I look at this as being pretty, even from 2015, I think you have to view that, at least for now, as being, somewhat constructive in terms of how that looks. So I'm really, and you can look at it from a shorter time period, as most do, and say, I believe as Blake was saying, 112 is a key level. I would obviously use any move down under, 111.38, which is a long way away. That would certainly be a stop for longs, but otherwise, I think there's a good chance that this resolves higher in the near term and can try to push up, which for me would be pretty constructive in this chart going back since 2015 in this. So that's
okay. Interesting. Does that mean that there's a potential setup coming in precious metals towards the end of the year, and possibly even energy, with the dollar being a major factor in, even though gold, I want to ask you, what were your thoughts when the dollar was going up and gold continued to recover?
Yeah, and it's interesting. The last couple months have been pretty resilient for gold, even in the wake of dollar strength. And of course, those aren't really necessarily always that, negatively correlated. I mean, some would argue that the yuan and others are. I look at when rates and the dollar typically go up. Typically, it's a very bad time for gold. Maybe you could argue that was just a different cycle that we're in, and part of that is risk off type, safe haven, trying to find. I think it's a little early right now for gold. I know that sentiment has gotten very negative, and pardon me, my computer's slow here. I don't know why it's not loading. So I'm still sort of a bear on gold based on even on this bounce, and I don't know, if we get up to 1270, I would be inclined to sort of fade that and think that you sort of pull back and you have a final hurrah to the downside and really wash people out before
1120-ish. Like that low in December.
Yeah, I would absolutely. If you were to get anywhere near back to early 2017 levels, I'm still, I like the longer term base at work. I just can't argue that right now. I find it tough to think that it's going to be off to the races with what's happening with yields and with the dollar. I think both of them are moving higher, and so
got it.
As equities start to resolve, then it's going to be tough for gold to really make that move just yet. But as the end of the year approaches, I think commodities can start to do better potentially. But much of that should depend on the dollar starting to turn down. For now, I think that's a little premature.
Okay, so then is it possible that? Let me just ask one more, Steve. I just want to ask him.
It's related. It's just related to the dollar because you were talking about the dollar for a long time. So I just wanted to ask Mark if he can clarify what kind of a top is he looking for in dollar, and I'm not talking about levels. I mean, are you actually looking for the dollar to top out and really wash out lower, or are we talking about like a pullback? That's what I wanted to know.
The nature of a high. Is it a high, or could it be the high?
Yeah. I mean, a lot of that's just going to depend on the structure really starting to show more signs. It's been, pretty constructive of late. I mean, I was sort of negative back in the middle part of the year, thinking that potentially we would peak out as of June, July, and now that seems to have resolved back higher. So for now, I have to trust this until I see evidence. I have an awareness of the cycles and the fact that the dollar, I think, should be turning down in the next couple of years, but I'm unwilling to make an intermediate term call yet technically that, we're here. I think that if you were to get, the Dixie up near 98 or potentially up near 100 and you show a little more symmetry with this longer term pattern, that might bring out some, you look on a monthly basis and you can make a case for, 13s to materialize. That would take a move up to 102. I mean, that's a huge move, but you look at the broader, scheme of things, and, the dollar's still been trending up for the last, arguably 8 years. It's been choppy over the last few.
Is it because Larry Kudlow's in the White House as a advisor? King dollar.
Well, I think I'm very skeptical of the power of anybody to manipulate or influence the dollar. I mean, a lot of that's just short-term noise, and algorithms, but the true cycles tend to, play out, and it has little to do with Kudlow or Trump or anybody in terms of what their thoughts. I mean, so, this is still a pretty good, go ahead.
Could it be yields? You're talking about perhaps the yields peak towards the end of the year with the dollar? Is that a
potentially
scenario?
I think that's right. I don't know that the bond market truly believes that the growth can continue if the Fed continues to hike. I think it has been a very constructive move, and right now you still want to bet on yields going higher. In my view,
4%?
I think that it's been a very no. I think probably 3.5. I don't.
Okay.
I don't make these longer term prognostications. I just, for now, I'm sort of bearish on treasuries. I do respect the longer term, pattern. Yeah. I think that sentiment has been bearish, and the bears have been rewarded, but I don't know that that can continue indefinitely. So if stocks really start to turn down, you will see a flight to quality that you really haven't seen in the past. For now, I'm still pretty, bullish on rates. I think yields still move higher. I don't think you can make a whole lot with this, just yet as to thinking, yields have peaked out. So that could mean between now and next March, April that you see yields continue, or maybe that's a year-end thing where it happens in December. But I'll certainly be watching. For now, my trend over the next 3 to 5 weeks is still bearish treasuries, bullish dollar. I think yields move higher. I think the dollar moves a little higher into mid to late November, and then I think you probably turn in the dollar, and we'll turn back up in commodities, and we'll see.
You think a weak
equities
dollar will help equities?
Well, it'll help certain parts of equities, certainly. Like materials and industrials, I don't know, right. Potentially energy is a different animal there, but
because
I don't.
They've been a lot of complaints during earnings season of a strong dollar hurting earnings on the currency translation. So would a weaker dollar help these transnationals do better? Nominally, anyway.
Well, certainly. I mean, you have to think that's correct, and it's not something that I put in my analysis. But I can't disagree with that. I think anything related to metals and mining and chemicals, most material stocks would likely start to bottom out and show much greater strength, which really has been sort of tough to come by of late. Most people are buying gold stocks, and it just hasn't been a great trade up until recently. I think you have seen at least a little bit of a bounce. But, the patterns on most of these things have been very difficult after the breakdown that we saw into September. Most people expected this would resolve higher, and it just has been, it's been tough to come by. So
and it's been underperforming the bullion, which isn't the greatest sign, is it? You really want to see the shares lead the bullion higher.
Yeah, potentially after the midterm election, that would cause the dollar to really begin the final, the final move higher in this cycle, and whether it stops in late November, late December, we'll cross that bridge when we come to it. But I think it's right to be long dollar here, at least over the next 3 to 5 weeks.
Any view on crude, Mark?
I had thought that we would probably stall out a little bit higher than we would and turn back up, and that simply has not materialized. So, that's interesting. I think, we are still in sort of a negative time seasonally for crude oil. I think, the time between February and May is a time to be bullish. Based on weekly charts, you could argue this area does have some importance based on just Ichimoku clouds, but we certainly have broken, the trend from last year technically. I would think that we're close to a decent counter trend rally. We're just getting to levels where you should start to snap back and at least try to push back to the high 60s. But we'll see how that really materializes. I think it's, for now it's been a tough trade, and with the sanctions, coming into full gear, we'll see if it's more of a sell the rally, sell the rumor and buy the news once it happens. I think crude certainly has a pretty decent floor technically, between 62 and 63. DeMark wise, it's going to take another 3 to 5 days. So I think you're getting close to a near-term low. I think it's probably still a little early, and I think once we see more evidence of some exhaustion and/or some evidence of price starting to lift, you just don't see that right now. So near-term, it's still right to be a bear, and it's just tough to fight trends. You could bounce a little bit, but you're not quite there, in my opinion.
Okay, well, Mark, you have a lot of fans here at ForexAnalytix, including our CEO, Blake. And for people that, you can't find you on CNBC when you make your appearances. I know, your Twitter handle's at Mark Newton CMT, but perhaps you could show your website and give the address for people to get in touch.
Yeah, that'd be great. I'm happy to do that. So let's.
How's it feel to have a lot of fans that are professional, not just,
Wonderful. Yeah, look, yeah. I appreciate the support of everybody. It's been an interesting market, and it's gotten a little more, it's gotten a lot more fun for many of us, just based on the volatility or so. So this is my website. It's, newtonadvisor.com. I've been, providing technical analysis to institutions over the last couple of years since I started this up in 2016. So I do have a free trial. As you notice, this box will come open if any have an interest in seeing what I write on a daily basis. I put out 2 notes a day. I put out a weekly note, and I usually try to do some intraday type things as well. I do have a blog that I try to keep updated, and as you note, I do have a public Twitter handle at Mark Newton CMT. I also have a private one at Newton Advisors that is for clients only, where I cover some of what I feel are the best risk-reward trades out there. And I've recently partnered up with StockTwits as well. So I have 2 different rooms that I'm offering there for a very cheap price. $25 a month will get you a lot of my my best risk-reward stock ideas. And then I offer my daily and weekly notes on there as well in a different room. So I'll be on CNBC this Wednesday at 2:25 tentatively. So hopefully that will go through as planned. But I'd invite those who want information to look at my website or email me at info@newtonadvisor.com. Happy to discuss whatever it is that you're looking at where I can be of help.
Well, much prosperity, health, and joy for you and your family during this upcoming holiday season, Mark.
Thanks, Dale. Likewise, the same to you and same to everybody out there listening.
Thank you, my trading warrior brother, Mark Newton. Another great review of the board. Thanks for helping us crystallize the jigsaw puzzle today, buddy.
Have a great day. Take care. Have a wonderful and profitable week for you and for everybody.
Thank you very much.
Happy holidays.
Happy holidays, Mark Newton. That's a wrap for us, guys. Good hunting the rest of the day. Tread lightly till the dust settles. That's my opinion. And remember, don't just count your pips, count your blessings. Thanks again, Mark Newton. And we'll see everyone for Midterm Tuesday and also for Turnaround Tuesday. See you tomorrow, guys. Adios. Thanks again, Mark. You're very welcome.